Hey traders, welcome back to Sharks Academy, and in today's video, I want to share with you the weekly market analysis for the upcoming week. And let's start off with the dollar index. So clearly we have a trendline liquidity here that is probably going to get ran. Okay, and this move over here should bring us towards this demand at this level because this is a reaccumulation phase, right? And then we still have liquidity highs over here. So no doubt we created a low. Prices seemingly looks to break this area. And then from then on, we are bearish on DXY into this demand. Okay, so then again, when we are bearish over here, we are looking to sell the USD pairs, right? Sell USD pairs and buy the opposite. Okay, so this range over here, when prices break structure here, we are looking to do this, right? And look to buy again for dollar over here. Next up, we have the Aussie dollar. So as previously mentioned, after prices break structure here, we are looking to sell. And we're looking to sell at two areas, right? We're looking to sell here, and we're looking to sell at this supply. So currently prices are delivering bullishly. No doubt we have a demand here that prices can still come back towards this demand before going higher. So all of these are bullish price action and price delivery. Currently we have a sell side move. So now, if I'm looking to sell, where am I looking to sell from? Let's just remove all of this. Okay, on the daily time frame, prices are delivering bullishly. Let me just use a break of structure here. And now, currently broke structure towards the downside. You can see over here, right? So prices break structure. This is the first time it shifts, all right? This is a change of character. Pulls back, break down, all right? So now, we can look for buys into this supply. Okay, expecting a move down towards this demand. Because now, prices shift in character, you can see. The intentions are there. We have bearish movement. We are looking to buy into this supply, then continue to run towards this demand before a potential accumulation to go higher. So this is the projection for Aussie dollar. So let's go down to the lower time frame to see how we can actually catch a move into perhaps this supply zone. So now on the 15 minutes time frame, we have a low here. We have a lower low here. So where is the high that created the low? They argue that it's over here, right? But this candle, let's go down to the lower time frame to see how this candle is formed. So truly, your low came from here. Okay, this is the high that created the low. So I think this was a news candle. And over here now, let's see the highs, right? The highs is created over here. So play around the time frames, look at how this candle is formed, because at this point of time, you have the highs and lows created in a single candle, right? So if you're confused about, whether it went higher first before creating lower, or went lower then higher, then of course just go down to the lower time frame to look at this. Now you know, right? We have a up move, then the breakdown. So this is the low, and this is the high that created the low. So simply break of structure, demand zone got involved, right? So on the 15 minutes, we have this movement that is delivered in this manner. So if you want to catch a move, you can go down to the lower time frame. Okay, the 5 minutes, and you can look at this. This is a demand that was left untapped. So truly, if prices comes back down, before tapping into my 4 hour supply, you can see this is the 4 hour supply that we should, this is the daily supply, sorry, that we should encounter some sort of a resistance or some sort of a opposing force, right? This is our range to play with. If prices comes back down to my 5 minutes demand zone after the break of structure, I am looking to buy. Okay, buy into the H4 supply before a potential move down, like this. Over here we have the Euro Yen, and there is no change with the previous analysis. We are still looking to sell here. Okay, so this is the refined area. Let's go and dive into what is this refined area. So this is a 4 hours refined area with a daily supply. So whatever that is happening over here, we are looking to buy into this supply before it goes down, right? Because we are still delivering bearishly. We can see a move down, a break of structure, supply zone, redistribution inside of here, or distribution phase, right? Before going lower to grab this liquidity. So of course you can aim for this demand. This demand is valid as well. And let's go down to the lower time frame to look at what is going on currently. So now we have a shift over here. You can see prices are delivering bullishly all the while. Okay, liquidity grab, break structure. So now, this move over here allows us to take sells into this demand because when prices break structure, it didn't come back to mitigate the origin. This break of structure, or rather shift in character, shift in structure or change of character, allows us to sell into this demand before buying. Of course, aiming this as my liquidity high and allowing my positions to run towards the higher time frame supply areas like this and this. So now let's take a look at what is going on inside here. Right, this is a H4 BOS. We are valid to go for sales on the lower time frame. So on the 15, we have high, low, higher high, break structure, right? So now where is the last buy to sell? This is the area I'm looking for. Alright, so perhaps for some of you, as soon as this prices break structure over here, you can see this was a candle close with intention. We have a pullback, and this pullback, if you were looking at the charts, you are immediately going to get involved. Look at this. Right, let's take a look on the lower time frame. So this was a 1 minute supply that got tapped into and shift aggressively. So if you have missed it like myself, then it's okay, right? We can look for a pullback into this supply zone. So what am I looking for when prices comes back to this supply? Right, because now we are valid for sells. You can even place a sell limit here, stop loss above the high, and aim for lows, right, over here. Otherwise, look for confirmations inside of this supply zone. Let's say we go down to the 1 minute. And you understand that prices can easily come back up to give you another shift in structure to go lower. This is valid as well. So over here for euro dollar, you can see that we are still playing around this range. Right, this is a demand zone. Okay, and now prices are delivering bullishly on the lower time frame on the daily. So in fact, this is quite messy, right? Especially if you are trading on the daily or the 4 hours. This is practically ranging. And on the daily, if you're looking to sell, you're looking to sell over here, right? But this zone is, I would say this zone is stronger because we have a redistribution over here, right? We have the manipulation of prices at this level. So this is the supply that is going to take prices lower. So when you look at the weekly time frame, this is the area they are looking to for sells. Okay, and of course, all of these are valid for sells as well. So this is the first root block. On the lower time frame, you can see we are bullish. Okay, and this will continue to be bullish until prices decides to break structure. So just follow the price action. Look at this. The first high created, higher low, higher high. So now, in fact, prices can even come back down, not breaking this low, then make a higher high. This is valid as well. So trade what you see currently. On the 4 hours, we are delivering bullishly. You can see low, high, low, break structure, pullback, break structure, pullback, break structure. So again, we can even look for this as a flip. So for those who have been following for a while now, you understand what's a flip zone, right? This is a supply. Prices now are in the supply zone. What we're going to see is a reaction. We're going to see a pullback. We're going to see a pullback like this before the break, leaving behind a demand zone that we can trade off on the lower time frame to bring prices higher. So if you are interested to check it out, please look at the description below, look at the link below. Join us if you want to. Otherwise, you just look at how we are always going to do this the same way, right? We're always approaching the markets with a 3-step process. And of course, step 3 differs, right? We have a supply and demand flip, we have Wyckoff, we have just a simple break of structure and whatsoever. So over here for pound yen, our analysis stays the same. We have a strong breakout, and then we have a complete turnaround, right? This shows selling pressure. And if I'm looking to sell, I'm looking to sell at this supply zone. Okay. So in fact, you can use the entire supply and look for a high time frame confirmation. If you're an aggressive trader, you can simply place a sell limit. And for us in Sharks Academy, we do not do that. We understand that we have a H4 break of structure. We are going down to the lower time frame, like the 15 minutes, to look for structural shifts like this. So in fact, instead of playing with the entire H4 supply, you understand that it's a huge range. So the truth is that prices can shift many times, right? Once, twice, thrice, and 4th time before it starts to run lower. And many traders can't afford those losses, right? Due to their psychology, their trade management, they are over leveraging, they are trading huge amount of money, right? So now we can remove this entire H4 supply and just look at the H1, right? Now this is cleaner because we have 2 H1 supply zones that are refined, and this narrows down our trading range. Go down to the 15 minutes, look for a shift in structure. Okay, And then you can take another step to look on the 1 minute time frame inside of your 15 MBOS. So both of these are your 15 minutes break of structure if you are using 15 minutes as your confirmation. Then simply go down to the 1 minute to look for another structural shift. And this is how you position yourself to get the best risk to reward, right? Understanding that you are still trading in line with the higher time frame. So next up, for the pound dollar, we are going to look at the weekly time frame. We have a supply zone here. Prices taps into it, started to deliver bearishly. So now if I want to be a seller, I'm going to sell here. Okay, let's play around time frames. Let's go to the daily, and you can see that we are refining towards this daily supply ultimately. So now if I want to be a seller, reaching for liquidity lows, or rather this demand zone. Okay, I'm looking to sell here towards this demand, and that's the plan for the higher time frame. So now what's going on the lower time frame? Currently we have this supply. Okay, we have this buy to sell move. Prices taps in and started to give us some sort of reaction, and this is what we want to see. Okay, so once prices breaks this structure, look for the last buy to sell here, right? This is valid to take buys from, because prices now taps into a supply. This supply should bring us lower, should bring us towards this demand, okay, and should see a break of structure. But if this supply fails, look for the demand that caused this supply to fail, right? And currently we can play back in our heads, right? We can expect a bullish movement again, then tap into this demand. So even if prices taps into demand first, I wouldn't buy here because this supply is still in play. We are still in this supply zone, all right? And now currently you are just fighting between supply and demand, and this is not good in terms of your hit ratio, right? You are not having the edge. So now when prices taps in, break structure, then just look for the demand zone here to get involved, to bring prices higher into this supply, because this supply is ultimately the area that we're looking to sell from. So over here we have the New Zealand dollar, and prices were delivering bullishly all the while. You can see it started to break down over here, right? So now we have a high, low, we have a high, low, high. Then start to broke structure, taps into supply. So now where is our last point of mitigation, and where am I trying to sell ultimately? I'm definitely trying to sell here. Okay, so now where am I looking to buy from? Demand zone here. Okay, so with current prices delivering bearishly, we can expect a move back up into this supply zone, distribute to go lower, right? Grabbing the liquidity created over here, tapping into this demand that is still valid because we still broke structure here. This demand from the origin is still left untapped or unmitigated. So now this is what they call a ping pong, right? We are looking to sell, then buy. We are going to buy. You can potentially buy here even, okay, but that's not what I'm looking to for. I'm looking to sell here, take prices down into this buy zone, then buy up again into this liquidity high. But if prices decides to break structure here, then we are going downside to deeper mitigation areas. So now for dollar Canadian, this is pretty straightforward. We have a demand zone here. Prices are currently tapping, show us some sort of rejection, right? So let me just remove all of these drawings, and you can see we tap into a supply, right? Prices deliver bearishly, tap into a demand zone, pulls back into a supply, and it's looking to break structure. So this is what we are waiting for. We are waiting for the daily to break this low. So once prices breaks this low, where is the supply that caused this demand to fail? Where is the last buy to sell on the daily time frame? This. Okay, which means to say if we see a breakdown, this is the reaction that was created when prices taps into demand. And now this is a valid supply for me to sell. So use the 3-step process again. We are on the daily time frame. We have a daily break of structure. Then go down to the 1 hour time frame. Look for supply and demand zones, right? You want to look for supply zones on the 4 hours, on the 1 hour, on the 15 minutes. You can refine them. Okay, let's just refine them now, okay? Assuming the daily started to break down lower, this is the entire block that we are interested in. But because this daily supply is so huge, we want to refine our areas. Why? Because we can look for multiple shifts again inside of here before it breaks down. And we want to limit those losses, right? So let's go down to the 4 hours. And you can see that we have this buy to sell. This is a buy to sell, in fact. Okay, so if it's not apparent to you on the 4 hours, then let's just go down to the lower time frame on the 1 hour. And now you can see this is a valid supply. Okay, this entire buy to sell is a valid supply. And of course, this is the origin. So now, can you see that this entire daily supply has been refined into a small area, right? We have two supply that is small. Let's remove the daily, and this is where I'm looking to sell from, right? Once we see a daily break or structure like this, a break or structure, I'm going down to the 15 or the 1 hour or the 4 hours, okay? Let's say the 1 hour, to look for a pullback into this area. Shift, get involved. And we are going to expect the same movement over here. Once I see a shift, pullback, sell. So now for $CHF, you can see that prices created a high here, created a low here, created a high, then do what? Broke structure. So I'm looking for a sell here, right? So this is clean. This is a supply. We are looking to sell here to grab liquidity created over here. So no doubt prices are in the demand. We're going to see what happens here, right? So similarly, you're going to wait for this demand to fail. Okay, like this. If prices were to pull back now, this is a battle between supply and demand, because now this demand is valid, right? This demand broke structure, and this demand should bring us higher into this supply. But if this demand fails to do that, and it gives us a reaction and a breakdown, we are certain to go sells into this demand zone on the lower time frame. So I think this was 2 hours. Yeah, this is a 2 hours demand that was left unmitigated, right? So now, with my 4 hours delivery in this manner, I'm looking for this demand to fail. Okay, once this demand fails, sell at this supply or this supply, because you understand that prices can come back up, use this as a liquidity area, tapping into a supply before going lower into this demand. And this is the trading plan for $CHF. So next up for the dollar yen. On the weekly time frame, okay, on the daily time frame, we are definitely going to expect to buy low, right? Because now we are buying high. You can see the break or structure happens here. All of these are extended price range. We are looking to buy here ultimately. This is the demand zone. You can use the entire one first and play around with it after that, right? This is the demand that I'm looking to buy from, definitely. We have a grab here, and we have a reaccumulation over here. A strong sell to buy move. This is the refined area. We are looking to get involved here. So now, this means that you can trade the bearish movement created at these highs. So let's go down to the lower time frame, or the 1 hour. So now what happens? On the 1 hour time frame, we have a demand here that is valid. Prices taps into this demand. If this demand were to create a bullish order flow, it's going to bring us higher. But look at what prices did. Prices taps into a demand, reacted, breakdown. Okay, this is the breakdown. So now, where are the supplies that are valid for you to take prices lower? Let's go down to the lower time frame. So can you see this is the reaction that was created when prices taps into the 1 hour demand, makes a high at this level before the breakdown. So this is a valid sell. Okay, so now there is a problem with this supply, because this is equal highs, right? Prices are likely to move into this area and instead might liquidate this area over here, which means to say prices may exceed this, grab the liquidity before going lower. This is perfectly valid. Okay, so we're going to see what happens when prices reacted over here. If prices were to grab liquidity here and give us an instant reaction that shows the intention of prices want to go lower, then we can take sells here, you know what I mean? And with that, we expect a continuation of the bearish movement into our daily demand that was marked out over here. So yes, on the high time frame, let me just remove all of this. We have a breakout structure again. We have a demand zone here. We are looking for lower time frame sell opportunities, because we understand that if I want to be a buyer, ultimately I want to buy here. Okay, and this current lower time frame supply or bearish movement is valid for sells into this demand. So this is the post analysis that I did for my students. These are the trade ideas that we discussed this week, or for the trading week, right? So now, what is this? We have a 3-step process again. We have a breakout structure, we have liquidity highs, we have a demand zone for step number 2. And what is step number 3? Our confirmations. So I'm looking for a 15M shift. I'm looking for 15 minutes breakout structure. And it can be clearly seen over here, right? Low, high, low, breakout structure. Leaving behind what? Demand zones. You're looking for lower time frame demand zones to get involved. So let's play around the time frame again. we can see that this ultimately came from a 1 minute demand, if I'm not wrong. So now can you see prices created a 1 minute demand that was left unmitigated? And of course, you can argue that all of this beneath are lower time frame demands, which is valid for buys as well. Okay. So now when prices taps into this area, we got involved immediately. Okay, because once prices taps into this, we are not sure whether this demand is going to hold. So no doubt this is an unmitigated demand area. We have no clue that it's going to hold. And that is why our initial entry was over here. Stop loss beneath this low and aim for liquidity highs over here. So this is a 1.1:2.5 for our first partials, and ultimately trying to target the higher time frame areas like this and the liquidity high lying above, which is the top range. This over here. Okay, so now understand what did we do. Go down to the lower time frame again. Look at this. Once prices taps into our demand, it gave us a shift. Can you see over here? Low, high, low, break of structure, demand zone. When this happened, prices taps in, break structure again, we shifted our stop loss immediately just beneath this low, because prices shifted here, started to create this bullish order flow. And you can see clearly prices created another demand here and respected it as well. So the truth is that when this happened, you can even shift your stop loss above to break even, because you expect this demand to hold. But prices never really came down, continue to deliver bullishly, you can see. Right? So all of these are bullish movement. Right? The creation of bullish movement that is valid for buys. Okay, so this is one of the trade ideas that we took for CATJ, and this will be the same thing over and over again. So the other pair that we took was EuroCAD. You can see over here, same thing. Where was it? I think it was this. Yep. So now we have a supply zone that is valid. I think this was on a daily. Okay, so this is the daily. We broke structure here, right? So this supply is valid. We go down to the lower time frame, we find this supply zone. So I think this was a 4 hours supply. We use the 50%, and this is how we get the supply zone. So similarly, do the same thing. What's next? 15 minutes, shift in structure. At this point of time, this was the zone that we're looking for. Let me mark it as red. We have a high, low, high, lower low. But can you see that prices didn't tap into our POI? We are not valid. We are not looking for sales. This is where traders get FOMO, because yes, prices shifted here technically, right? But the prices tap into your supply zone that you were looking for, it didn't. Okay? Make a strong move. This was intentional. Can you see this strong move followed by the collapse? This was intentional. Leaving behind a supply here on the lower time frame. This is where you get involved. Look at this. Where are the valid supply zones? Here. Okay, here got mitigated. Here is a valid supply zone as well. Prices came back into this supply zone, created a high, a low, a higher high, a break of structure, a supply zone, started to move down. Where is the last point of mitigation? This is the last point of mitigation. Taps in for you to get a secondary entry. Understanding that yes, you are trading on the 1 minute time frame. You know, it's crazy to trade on 1 minute time frame or a seconds time frame. But if you are framing this entire movement on the higher time frame, we started from a daily break of structure over here. You can see, right? The high, the low, this is a minor high, right? So this is a minor low. So this is a high. So if you want prices to break down and continue to deliver bearishly, the truth is that you have to break this low. Okay, so this minor low is going to give us an inner range target. Okay, so this created this supply zone. There is a minor high. So can you see that this is a minor high already? Because your major high is here. So this minor break of structure over here created a minor supply zone for you to get involved. Go down to the lower time frame, the 15M. Look for the shift, which happens here. Supply zone, 1 minute time frame, shift, order flow. All of these comes into play. All right. And the last trade that we took, I think it was it GCAT? Yeah, so this is a GCAT trade. So now, break of structure here. Can you see? So yes, prices came a long way, taps into this supply. So I use the 50%. So this is a buy to sell that broke structure. This is a supply zone that is valid. I use the 50% because I want to narrow down my trading range. Imagine I use this entire block. Right, this is too huge of a supply. I want to refine them, and you can see clearly we have this supply zone that is valid. So now prices broke structure. Yes, you are bullish currently. But where are you bullish from? If I want to be a buyer, I'm going to buy low. I'm going to buy... We do have a clean demand here. Let's go down to the 1 hour. So this was the demand zone that I was looking for. If I want to be a buyer, these two red POIs are the ones that I'm interested to buy from, right? To eventually run the liquidity over here. Because now, if you're trying to buy over here, you're buying high up the range. Okay? So now when prices break structure here, created two demand zones, this is where I'm looking for the accumulation phase to potentially go higher, right? This entire breakdown should only happen if this low is broken, right? Because you can see high, low, high, low. Once this happens, we can expect runs of all of these demand zones. All of this liquidity will be taken away. Okay, but now, currently we are still in the bullish range. We are still in this buy structure. Anything within this leg is for you to buy. Okay, so now, how do we catch sells then? Because isn't this like a counter trend trade? We go down to the 15 minutes time frame and we can see clearly, I didn't get involved here. Okay, so let me just remove this. This is the buy side liquidity. This is a Wyckoff on the 15M. Okay, so for those who do not know what is the Wyckoff or how to spot them, buying climax, automatic rally, ST, UT, UTAP, break structure, pull back to this supply zone. So in fact, you can use the entire supply over here. But I use the refined area to get involved. I used the 5 minutes. Okay, I think it was lower. It was 1 minute. So this is a 1 minute supply within the 15 minutes supply zone, right? This over here is valid for sells. So I took a sell here. I didn't get involved here. I took a sell here, stop loss above the highest point because I understand that prices can easily take this out before going lower, right? While still validating your entire sell structure because the ultimate high, the pivot high started from here. So as long as this high is not invalidated, you are looking for sells in this range. Okay, and that's why I might stop loss above this area. Take profit number 1 would be at this level. Sell side liquidity, trend line creation, immediate liquidity lows, right? This is my TP1 and TP2 would be at this level. And then I expect a run towards the two red zones. Can you see? The two areas that I'm looking to buy from, which is here and here. Okay, so now what do you do when prices taps into your opposing demand? Look for clues that prices want to go higher. At this point of time, prices did tap into your demand, right? Did it give you a shift in structure? It didn't. This is the low. This is the high. If I want to be a buyer of this demand, I want to see prices break structure. Pull back, get involved here. Maybe use the 1 minute shift to get the better RR. Otherwise, if you're satisfied with the risk to reward, you can buy here, stop loss beneath this low. This is valid as well. But when prices taps into this, you can see that it clearly didn't break structure. And that is why when prices didn't do a break of structure over here, you are not going to buy. Okay? So if you like what you've seen and if you appreciate the videos that we did so far, please drop the like, please subscribe and join us if you want to. The link is on the description beneath. Otherwise, have a great trading week next week. So we also took a loss. Nothing is 100%. We can have the same process, we can have the same 3-step process, but still get a losing trade, right? This is normal in trading. So look at this. On the 4 hours, we have a break of structure. We are looking to buy, and similarly, if you're looking to buy, we're going to buy low. We're going to buy anywhere inside of here, right? Here. Okay, so can you see this is a demand already? On the 1 hour time frame, this is a valid demand, and of course, we caught a move here. On the 15 minutes was where I'm looking for, and you can see when prices starts to react over here, a low, a high. This is a high, but there isn't a low, right? You want to see a low and a high, but this didn't create. So this was the high that happened. Broke structure, try to get involved on the lower time frame. I think I had a demand here. Okay. So I measured 50% and I get involved here. And I lost money right away. Stop loss beneath this low. Can you see that I got wicked out? And then prices decides to smash, take profit here and here. So this was the loss that we had to take. Okay, and then on the higher time frame, if you're looking for 1 hour as a confirmation, you realize that you didn't get a 1 hour break like this. This was a 1 hour wick out, so it depends on you if you are using a wick break or you're using a body break. Okay, if you're using a body break, then you wouldn't have gotten involved. If you're using a wick break, and maybe if you're looking this on a 15 minutes time frame, you can see this is a body break on a 15. This is a valid demand zone. Okay, so when prices taps into this area, you could have been a buyer here as well and lost money. Can you see? You will have lost twice. But now take a look at this. If you were to refine this 15 minutes demand, you can actually come out with a profitable trade. And how do you do that? Prices breaks the high here and continue to deliver bullishly. So of course, this demand is valid. So let's go down to a lower time frame to see, is there a refined area? Okay, so we do not have a refined area. So this 15 minutes demand was the entire block itself. Can you see? This inside bar is a demand. So we use the 50%. You can see prices taps into it perfectly, right? So this is the first demand zone. Go down to the lower time frame. So now you can see that we are playing around with the 1 minute now. And what are we looking for? We're looking for a break of structure. We're looking for a shift or any sign that tells that prices wants to go higher. Okay, so high, low, break structure, demand zone, get involved. This is the way you can actually come up with profits in the market if you are using the lower time frame, of course. Understanding that prices does not necessarily needs to run towards this liquidity high for a 1:21. Can you see, based off this move, you are in it for 1:5. Okay, and this framework came from a 15 minutes. So based off this framework, you can see that yes, this looks like a loss. But if you were to look on the lower time frame, understand how prices are moving because markets are fractal, you can get involved in the 1 minute and still come out profitable. Okay, and of course, this is how you manage your trade, right? What we do over here is that we are always looking for the first liquidity high as our TP1, right? Because this is the highest point after the break of structure before it pulls back. So this range on the 1 minute has an immediate target of this level. So if you're looking for a move up towards the higher time frame liquidity based off this 1M, your hit rate is going to be really low, maybe about 20%. Okay, but if you can tweak your strategy, you can look for the appropriate targets of where to take profit. Okay, understanding that this is your liquidity high because your break of structure came from, yeah, this is the break. This is your first take profit.